Why is China's private sector confidence so cautious in 2026? Economic growth numbers tell one story, but business sentiment tells another. In China today, the key question is not whether growth exists. It is whether private companies feel confident enough to expand, and that difference matters. More than headlines suggest, private sector confidence is a structural variable. It influences hiring, capital expenditure, innovation, investment, and long-term planning. When confidence is strong, companies borrow to expand capacity and take calculated risks. When confidence weakens, firms preserve cash for delayed hiring and focus on survival efficiency. China's current environment reflects several overlapping pressures. First, property market adjustment has reduced collateral values. This affects financing channels for many small and medium enterprises. Second, external demand remains uncertain due to global trade realignment and geopolitical friction. Third, regulatory cycles over the past few years have increased sensitivity to policy direction. Even if stabilization efforts are underway, none of these factors alone define the trajectory, but together, they shape business psychology. It is important to distinguish between growth, recovery, and confidence recovery. Output can stabilize before sentiment does. For private entrepreneurs, the question is not short-term revenue. It is predictability, clarity about rules, financing access, and long-term policy orientation. If predictability improves, the investment can return gradually. If uncertainty persists, capital remains defensive. The broader implication is that the private sector sentiment functions as a multiplier. It can amplify recovery or dampen it. So the structural issue is not simply whether China grows at 4% or 5%. It is whether confidence mechanisms are rebuilt in parallel with macro stabilization.